Boom shakalaka, what is going on, everybody? Randall here from Crypto Love. Today's episode, we're going to take a look at the Fed's emergency rate cuts and why the impact on Bitcoin may not be what you're expecting. So if you want to find out, stay tuned. What's going on, everybody? Today, the Fed had their emergency rate cut. As said right here, the Federal Reserve slashed interest rates today, trimming the federal fund rates by 0.5% to a range of 1 to 1.25%. The Fed is trying to stay ahead of disruptions and economic slowdowns caused by the rapidly spreading coronavirus. Now, this affects things like mortgages, home equity, CDs and savings accounts, credit cards, auto loans, stock market. But the bottom line is, with the market expecting some economic weakness due to the coronavirus and unemployment sitting near historic lows, you'll want to consider how much longer the economy's expansion can continue. When the economy enters a recessionary period again, the rates should fall, so it may make sense to make your money moves while you still receive relatively higher yields. What they're saying is keep an eye out for how much longer the economy's expansion can continue. The economy's been expanding for a long, long time. And since the last recession we had in 2008, they didn't really solve anything. They just kind of patched it up, kicked the can down the road. This is potentially going to be a bigger one. Now, how can that impact Bitcoin? That's what we're going to be looking at in today's episode. So, just to give you a heads up on Bitcoin, right now at about $8,700, $8,737, sitting right around the $8,700 level we've been talking about in this first little wedge here, where it'll probably bounce back and forth until about May. So no real changes there in terms of Bitcoin price. But with the Fed rate cut today, it reminded me of this article that was posted a few days ago, March 2nd, by Crypto Bullet on TradingView. Hey, Bitcoin bulls, don't pray for an economic crisis. And what he does here, he takes a look at both Bitcoin and also the S&P 500. So Bitcoin's in orange, S&P 500 in green. And while they say that Bitcoin is not a highly correlated asset to other assets, it does tend to have a little bit of following of what goes on in the S&P 500. And he says here that the increased value in Bitcoin has been greatly benefited by an increased value in the S&P 500. When the S&P goes up, companies do well, people have good jobs and make money. So it makes it easier for those people to invest in something speculative like Bitcoin. If there's an economic disaster and people are losing their jobs, you probably see people selling their Bitcoin instead of having more coins, because what are you going to buy Bitcoin with? If you have some Bitcoin, you got to put food on the table, so you may have to sell Bitcoin in order to do that. And he's got a very good point, because this article here is based on a study that about 78% of workers in the United States live paycheck to paycheck. That means they don't have any extra money. Now, if they have money in crypto and all of a sudden they lose their job or they're not making as much money, guess what? They may have to sell some crypto in order to do that. Now, another option for not selling your crypto is to get something like a crypto-based loan with Celsius or one of the other companies that does that. That's an option, but that's only kind of a short-term fix for a big thing here, where he says that if, in fact, the S&P goes down, people start having to put food on the table, they may sell their Bitcoin in order to do that. And there's this article right here that says past Fed rate cuts suggest Bitcoin is not a safe haven asset. So this takes a look at the last 3 times the Fed cut interest rates back in 2019. And it turns out that during those time periods, Bitcoin actually went down. Bitcoin price went down. How bad? Well, they took a look at the median return across 1 week, 1 month, and 3 months, and the returns were negative 5%, negative 20%, and negative 11% as shown in this chart right here. So it turns out that with these interest rate cuts, not exactly a good thing. Now, I don't like to be the bearer of bad news, and personally, I think that over the long term, Bitcoin is going to do well for one significant reason. Now, this is talking about Fed rate cuts, basically the amount, the rates are going down, and guess what? Right now, to a range of 1 to 1.25%. You know what's below 1.1 and 1.25%? 0. You know what's below that? Negative. That's right, negative interest rates. And that's what's coming. As a matter of fact, the Winklevosses tweeted, Cameron did, back in October, $17 trillion are currently held in negative interest rate bonds. 17 trillion reasons why you should own Bitcoin. That's right. With more and more assets having negative interest rates, which is where the Fed is going with these rate cuts, that's going to be a better and better reason to invest in the best producing, the best return asset of the past 10 years, of the past decade, Bitcoin. So while in the short term this may be negative, and while people may not be dumping their money into crypto and into Bitcoin with Fed rate cuts, over the long term, people are not going to want to have their money in negative interest assets because that costs them money to keep their money in there, which is stupid. They'll want to put it in something like Bitcoin that has deflationary supply that over the long term goes up. Simple economics, supply and demand. So thank you guys for watching. Hope you enjoyed that one. I'll catch you guys later. Peace.